You're 50 years old. You've built a net worth of $750,000. You're married with kids still at home, and you're wondering, could you step away from full-time work in Boise, Idaho completely? Not scale back, not consult occasionally, fully walk away. Before we answer that, we need to address the timeline, because at 50, the timeline drives the math. Social Security is still 12 to 17 years away. That means your portfolio must fund more than a decade before guaranteed income begins. This isn't traditional retirement math. This is early drawdown math, and early drawdown magnifies risk. What $750,000 can produce. And it's done at a 4% withdrawal rate, $30,000 per year, about $2,500 per month. At 3.5%, $26,250 annually. At 3%, $22,500 annually. Those are your income guardrails, but durability matters more than income. We modeled a 35 to 40 year retirement, starting balance $750,000. External withdrawal $30,000. Your assumed return 5%, trying to again under steady markets, the portfolio can extend into your late 80s, but if negative returns hit early, sequence risk accelerates depletion. 4% at 50 is not the same as 4% at 65. So income must align with Boise's real costs. Boise cost of living Boise is more affordable than coastal markets, but it is no longer low cost. Let's use realistic numbers. Renting a 3-bedroom rental averages about $2,200 per month. Add family expenses, groceries, $1,000, utilities, $350, transportation, $700, private health insurance, $1,200, children's costs, $600, miscellaneous, $500, total monthly spending about $6,550, roughly $78,600 per year, compared to $30,000 from a 4% withdrawal. The gap is significant. Owning outright, assume a $450,000 home owned free and clear, property tax about $4,000 annually, Artini insurance $1,500, maintenance reserve $6,000. Housing cost averages roughly $950 per month. Total household spending about $5,300 per month, roughly $63,600 per year, closer, but still more than double portfolio income at 4%. Now, with a mortgage, assume a $350,000 mortgage at 6.5%, principal and interest about $2,200 monthly. Add taxes, insurance, maintenance. Housing approaches $3,300 per month. Total spending rises to roughly $7,700 per month, about $92,000 per year. This is the most fragile structure. So what's the real answer? At 50, with $750,000 and children still at home, full retirement in Boise is not supported by the portfolio alone. Even under the best housing case, expenses exceed sustainable withdrawals by a wide margin. The math changes only if one spouse earns part-time income, children become financially independent, or Social Security begins and reduces portfolio strain. Even $20,000 to $30,000 of annual income cuts withdrawal pressure dramatically. Without supplemental income, the plan depends heavily on market performance, and early retirement rarely collapses immediately. It erodes when fixed costs quietly exceed sustainable income year after year. At 50, margin matters. And at $750,000 for a family with kids in Boise, the margin is thin. This example is educational, not financial advice. If you'd like to see how $1 million performs in Boise, or how Boise compares to Salt Lake City or Denver, tell me which city we model next. Because retirement success isn't about the first 5 years, it's about whether the money lasts. For disciplined, city-by-city retirement math without optimism bias, subscribe to Mostly